What's making headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello, welcome back to What's Making Headlines, your weekly wrap-up of the news. It's Annie, Will and Ben here, joining you again to talk through what we've been writing about and seeing on the ground this week. Ben, how's your week been?
Yeah, pretty good. As always, busy. Sent them September magazine off this week, which was good. It's always good to see that go to the printers. So, lots of moving pieces, but yeah, good week.
Yeah, September magazine. Looking forward to that coming out. I think it should be out next 10 days, so probably early September. But yeah, the last edition, which includes the findings of our third-party lending report analysis. And this time it's the turn of the non-major banks, so stay tuned to see what brokers think of the non-majors and who's being ranked the best out of them. That will be in the September edition. Will, how about you? How was your week?
Yeah, good. Lots of political news, which has been interesting.
Lots of political news.
Yeah.
Actually, no.
Or not.
Yeah. So we've had the
about
Economic Reform Roundtable took place this week, 3 days, with Treasurer Jim Chalmers inviting a whole bunch of people from across different businesses and unions and industries to talk about productivity and how specifically productivity can help improve the economy, but annoyingly closed doors roundtables. So no media allowed, no coverage, no TV. So we've had to rely on people talking about it once they came out of the roundtables and the kind of press conferences and speeches that Treasurer Chalmers has been delivering this week. So sort of, yes, a big week for political news, but also kind of not really, because we're having to really take people's word for it. We can't actually see verbatim from the horse's mouth what's been happening. But give us a summary, because you were following this.
Yeah,
what's been happening this
week?
As
you said, lots of talk, and it's hard to know in terms of how much meaningful change will come of it, I'd say. So what happened yesterday following the final day, Chalmers basically outlined 10 longer-term reform priorities, was the wording he used. And we should say he doesn't actually, there's no
detail.
yet.
As always, whenever they announce something, they go, this is what we want to do, and we'll have to now do millions of consultations to actually find out what that looks like.
Yeah, and they hinted at quite a lot of them before it actually started, so we do know a fair amount. But in terms of the new stuff, the stuff that's most relevant, I would say, changes to the National Construction Code to build basically housing more quickly, which they kind of hinted at, but that's a big one. A lot around AI. They just said making it a national priority.
Yeah, whatever that means.
Yeah, so it's so vague. But
because I think some of this is about, like, whether we want to have really big farming kind of areas for AI in Australia. Also looking at some of the rules around AI. Like, there's been lots of talk around copyright. Yeah, exactly. So being like, should we be easing up the copyright to allow AI to use some of that data and stream and mine from media companies, which of course we don't love.
Yeah.
But, something to consider, make it a priority, and so we'll see what that looks like.
And also we should say that they said that this would inform the next 3 federal budgets. So in theory, we should see more reforms going forward. Other stuff, the tax, there was so much talk around tax, and the wording was building a better tax system was the priority, which you'd hope the government would do anyway. But
make it better.
Loads around red tape, cutting red tape. Changes to regulation, but again, light on details, and then speeding up approvals for housing, which I think will be a more pressing concern.
And that includes things like environmental sort of
legislation.
Yeah, legislation. I think the things around tax that we've been hearing about, it seems very much talking about the fact that it's sort of all been, to date, the tax system is sort of more favourably skewed to older Australians. So I think a lot of what Jim Chalmers was talking about in the press conference last night on Thursday was about making it more equitable for younger workers, because I think he's sort of saying, younger workers are really shouldering a lot of the tax burden, not even younger, sort of like middle-aged, I suppose, 30-ish to 40-ish, really shouldering a lot of the tax burden, and they're also the ones that are probably really squeezed for things like being able to afford housing, whereas at the moment, a lot of the sort of older retiree level Australians are kind of really benefiting from a system that works in their favour. So I think he's a bit like, let's have a look at the tax system and make sure it's actually equitable, so we're not punishing people for working when they're in peak work life, and then allowing people to really have a luxurious retirement.
Yeah.
But, I'm sure when he retires, he'll be changing his tune. But I think, when we look at the Economic Reform Roundtable, so 3 days of it, there's been, the amount of discussion and talking points in the lead up to it. It was something like 900 submissions they
More than
received.
900, yeah.
They had, I don't know how many people at the actual roundtables over the course of the last three days, but it must be, let's say, at least 40, 50. They had, I think it was 29 hours of conversation, so a fair chunk. But I would really wanted to have seen what was actually being said. Like, were they going into the roundtable just saying, here are our 10 priorities, what do you think? And kind of really fleshing out what that looked like? Or were they being like, we want to hear what you have to think? Were they trying to see if they could get the unions and the businesses to work together? Like, I just wonder what actually went on day to day. So hopefully someone will
it would be interesting
provide
to
some more
see
detail.
how much of it they decided up front and how much of it was being ultra cynical, how much it was a PR stunt to try and sort of sell it as, oh, we spoke to all these people and this is what we've come up with.
Yeah.
Because really, like, the planning stuff in particular, they'd basically said before it started.
They said all of it pretty much
Yeah.
before it started.
The AI stuff was the one thing which I think there was a bit of, because they'd kind of hinted we're going to discuss it, but
Yeah.
they said that the union changed they were a bit more open to it after the discussion.
I
but-
think I was reading some of the coverage yesterday and this morning, and they were talking about saying that there was a 5-minute meeting between the ACTU and Atlassian, and they had a 5-minute meeting, and within that 5 minutes supposedly managed to come to some sort of agreement. So everyone expected there would be a lot more pushback between the
Yeah.
two, and actually they were on the same page. So I think it kind of went further than they thought it was going to.
Yeah.
And that was around copyright. Ben, when you think about the Economic Reform Roundtable, what were sort of your takeaways this week? You were talking earlier about seeing all these pictures of Jim Chalmers juggling coffee.
Yeah, that was my main impression.
Yeah.
Because in so much of the coverage, I suppose, he always seemed to be the one bringing the coffees in as well.
Good for him.
Which
I like
is probably,
that.
yeah.
You know?
I mean, if I was in his position, I'd be doing it as well. But yeah, it's always sort of interesting to see actually what comes out of things like this, whether there's actually any meaningful change. But I also think, on purpose, it's a good thing that they're sort of getting around the table and talking through these issues because, if they don't, then you're not going to get better outcomes.
Not going to get it done, yeah. I still sort of think, though, it would be great if we had 4-year terms here in Australia, because 3 years, just not a lot time to get stuff done.
Yeah.
And already, a few months into I haven't started yet back at Parliament. It starts in September, so next month. So we've still got a bit of time before we actually see anything happen, but it feels like it just takes so long to get anything done. And then by the time it's halfway through, it's another election. So, yeah. Anyway, you spoke to brokers this week, Will, about what they would like to see come out of the Economic Reform Roundtable. What was on the wish list from the brokers you've chatted to?
So, yeah, obviously focused towards broking property, and a lot of it was around tax, I would say. So the big kind of standouts were more support for first-home buyers was probably the common denominator. I spoke to Scott Beattie, who is the founder of Cube Home Loans, the brokerage. He actually said that he would want to see changes to stamp duty for downsizers to encourage older people to move up, free up houses, help first-time buyers. Ben Kingsley, who is chair of Property Investors Council of Australia and the MD of Empower Wealth, he said that he'd want to change the serviceability buffer, so keep it at 3% for investors, but drop it by 1.5% for owner-occupiers, just to level the playing field a bit. And then Balpreet Bal, who is finance broker at Loan Market in WA, he went into kind of regional changes, and he said that the eligibility thresholds for first-home buyer schemes in WA didn't really match the actual reality of house prices. So he pointed to, unless you worked in mining, where obviously you're paid a good salary, that for key workers, the median house price in Perth is 870 grand, and then the threshold is about 800 grand. So he said you just need to move the threshold to help people, which makes complete sense.
Yeah, and we actually did see Keystart this week change their
they did
property
actually.
limits to
Yes.
reflect that. So they, I think last year, announced they were going to be constantly reviewing the Keystart price limits based on median prices. And because they've changed so much, they've actually changed them twice in the last 6 months, I think. So this is the second time.
Yeah, exactly, yeah.
They've done that. And that makes sense because you don't want to have like a government scheme which doesn't benefit anyone.
Yeah.
So yeah, good points from the brokers there, and it's great to hear from our readers about what they want to see and what they think and what they're doing. So thanks everyone who pitched in there. And talk to Will for that story. We're going to take a quick break here. When we come back, we'll unpack some more of the things that we're seeing at the lenders as results season continues, and we'll get into that just after this message. So we've had a few lenders this week release their financial results, whether full year, half year, depending on what their financial calendar is. One of the people that we saw full year results from was SME bank Judo Bank. And Will, you were covering this story for us. What have they been seeing over at Judo?
Yeah, so full year results, in terms of the main points, obviously focused on SME lending, and its lending book rose 16% year on year to $12.5 billion. So quite healthy growth. And that's loan book, so it's doubled in only 3 years, so obviously growing rapidly. Business lending was up 17.3% to $9.6 billion. So really strong growth, and that's more than 3/4 of its lending book is just to businesses. Home loans, which I'll be honest, I wasn't 100% sure that she did home loans, but
So I think they only do it for business customers. I'm not sure they kind of actively go out and seek mortgage business. I think it's if you're a business customer, then you can get a home loan with Judo, but you've got to already kind of be a business customer.
It still makes up 9% of all their loans and advances. That was up 1.3%, so kind of creeping up. And then just in terms of overall growth, net profit after tax up 24% to 86.4 million. And that was driven by loans primarily. So really strong growth and loads of regional expansion that they went into as well.
Yeah, and if you want to hear more from Judo Bank, then you can chat to them at the Commercial Finance Awards that are coming up later this year. Little plug there, shameless plug. But they're our principal partners, so they'll be doing a lot of work with us later up coming on this year, talking about celebrating brokers, because of course broker channel a big source of flows for them, and seeing that sort of strong growth there. Another lender we spoke to this week for their full year financial results was MyState Bank, and I had the pleasure of chatting to the CEO Brett Morgan about the results, because it's actually fairly interesting. It was the first full year results we've had since they merged with Auswide Bank. So looking at what's been happening to the group, where to from here as well, like will they keep the multi-brand strategy, because they've got MyState, which is the largest of the group bank. It's a Tasmania-based lender but has a national presence through broker channel. Auswide Bank is much smaller book size, but they acquired that last year. I think it settled in February. Then they've got Selfco, which is the equipment finance, asset finance arm, and that's all broker originated as well. And then TPT Wealth, which is the financial planning and commercial lending arm. So they've got these 4 different elements, and we were kind of looking at, well, how has that been working with the new group? What does that look like? What's the future strategy? And just quickly over FY25, they saw their home loan base increase by 62%. Now that's mostly because of the merger, but if just looking at loan book growth post-merger, volumes grew 7.5% on an annualized basis. That's pretty good. Like if you think they merged in February, that's strong growth. They saw 3.8 billion in mortgage applications and 2.3 billion in settlements over the year. So again, much smaller numbers than we typically talk about when we're talking about the banks, because of course it's a non-major bank rather than a big major bank. I'm really seeing a substantial uplift in settlements in the second half of the financial year. So this really the beginning of this calendar year, I think partly because of things like rate reductions, but I think also because they have been seeing things like the sort of broader group being able to cross-sell. So if a broker came to MyState and was talking to a BDM about a particular loan, MyState might not have credit appetite or a product for them, but they might do an Auswide. And so since the merger, they've been able to say, well, actually, we can't give you a MyState loan for that, but Auswide can. And you can write the loan that way. So I think because of that, they're seeing a bit more increase in business as well. People being able to sort of move brokers through the different channels and find a solution through one of the 4. But I did have a chat to, as I said, CEO Brett Morgan about what they were doing and how they've been building the lending group. And he was obviously super thankful to the broker channel for helping grow the book over the last financial year. But I think really like sort of talking about future vision, he's sort of saying that it's really looking at investing further in that. So we recently saw that they'd appointed Mark Woolnough, who many people remember from ING. He's now leading the group's broker distribution channel. He's also looking at, they've been increasing their turnaround times recently. So he was sort of talking about that and how they're kind of really pleased that I think 40% of loans reached a full decision within 5 days, with initial feedback around 2 days. And really sort of saying, generally across all of the different groups, they're going to be looking at different priorities. So I think for Selfco, they're going to be really focusing on equipment finance and trying to grow that arm. And that has been really growing very quickly, something like 100% growth in the last year. And I think also seeing, and of course through broker channels, so seeing that all go through. They're also looking at a new loan origination platform. So they're currently in the process of talking to different groups about who can do what for them. So apparently they're going to have a decision on that before the end of financial year, and brokers will obviously benefit from that. The hope is that it becomes much faster again, turnaround times. And I think also looking at things like where else they can go. So the CEO was talking about still having a multi-brand strategy in place, but kind of really consolidating the back office and the sort of the tech behind the group, so that it's sort of just one system for everyone rather than having multiple systems, which obviously makes sense in a merger environment. So that was my state. Some of the other groups that we spoke to this week include Pepper Money. They had their half-year results release, and I spoke to CEO Mario Rahayem this week about their results. And the thing that really stood out for me was that Pepper Money typically has been really high on the non-conforming sort of near-prime loans. But this half, their flows sort of flipped. So last year, for example, first half 24, their non-conforming business really took up 60% of their business, and prime was 40%. This half, first half 25, 70% was prime and 30% was non-conforming. So I was like, what's happening here? Is this a purposeful strategy sidestep? Are you looking at targeting prime, or is it something else? And Mario was saying, well, the volumes are actually still relatively similar. So non-conforming has dipped down, but it will dip from something like 1 billion to about 800 million. But he's like, but just generally, because competition in non-conforming has been so strong, he was suggesting that some lenders have been really pricing so low that he was like, business has been going to other lenders maybe for non-conforming, but we still got a really great proposition, and brokers are really loving it for prime because we're super fast, we can make it really easy for them. And he was also suggesting that they've been tweaking and tailoring a lot of their prime offerings, both in resi and in commercial mortgages. So he was like, actually, we've had loads of policy changes. I think he said more than a dozen in the last few months. In the last half year. So looking at that really being a driver of growth as well, which I thought was quite interesting, because I've never really thought of prime being the main stay for Pepper Money flows. So we'll have to continue watching that, and when they release their full year results. Other things they've been talking about is technology investment, AI, the big thing again that everyone's been talking about. And Mario is saying that they've been trialing a system at Pepper Money where when customer service staff are on the phone to customers, the AI will actually pick up if a customer doesn't understand something, or if they're sounding stressed, if their voice sounds stressed, and it will flag that with the customer service person, which I thought was quite interesting, sort of analysing the tone of how the conversation's going to be like, maybe you need to explain this more fully. Yeah. So that was pretty interesting. But yeah, generally, lots of stuff going on at the lenders. Pepper Money also doing really well because of their white label arm, which I think that was something like 52% of their new business came from white label lending, which of course many of the aggregators have white label loans through Pepper Money. So lots going on there. You can unpack all of the financial results on theadvisor.com.au. We'll take a quick break here, but when we come back, we'll be talking a bit more about what else we're seeing in the market, more on open banking and AI, and what's next coming up in the advisor world. And we'll get into that just after this. So we talked a lot about what the lenders have been seeing this week and the last few months over the financial reporting season. And I think some other stats we've been seeing as well has been like, well, how has this been reflecting what the market's doing? So I think, with Pepper Money, we were just saying they're really seeing a high prime flow, with Judo Bank seeing strong demand from businesses coming through. But we kind of also want to know, well, what are regular mum and dad home buyers looking at? What are they seeing and feeling? And there's lots of research that comes out across the board about this. But Ben, we were talking earlier about some that were about home buyer sentiment, and some good news coming down the track.
Yeah, one of the really interesting ones that came out this week was the Westpac Melbourne Institute, data from Westpac and the Melbourne Institute about they call it the time to buy a dwelling index. So it's basically a measure of what consumer sentiment is regarding whether they think it's a good time to buy a dwelling or not. So basically, in August, it rose 10.5% to 97.8, which is the highest read in almost 4 years, and it's 37% higher year on year. So it's, I suppose, it's pretty much broadly reflective of the sort of rate cuts we saw earlier in the year.
Yeah, and I think actually as well, the highest level for 4 years, so that takes us to 2021. And remember, in 2021, the cash rate was 0.1%. So like the fact that sentiment is the same level as it was then is crazy.
Yeah, it is interesting. If you sort of dig into the data as well, 3/4 of the consumers surveyed said they expect property prices to rise in the next 12 months.
That's less good.
Which is less good.
Yeah.
The house price expectation index, I think, is around about 164.2, which is the second highest since 2013, which is interesting. But yeah, it kind of shows. I think it's going to be really interesting to see what happens in the property world over the next few months, particularly in light of the fact that the rate cuts early in the year probably sort of got a delayed effect.
Yeah.
And people are probably just trying to time their entry into the market.
Well, I think that's probably a good reflection, actually, the fact that we can see both of those measures. So firstly, people saying we think it's a good time to buy, but secondly saying we also think house prices are going to escalate. So that is why it's a good time to buy. It's like, buy now because we won't have a chance to later.
Yeah, exactly.
We won't be able to afford it later.
Yeah.
Also, with that figure, that's still negative. If the neutral rate's 100, it's
that's
still
true.
like a negative time, which is so weird when you think about it.
Yeah.
But that will be the time lag, I imagine, on the next, you'd think the next reading would be positive.
Yeah,
Yeah.
it's really interesting. We actually wrote about property for our September magazine, which I mentioned earlier. The Spring Property Report. It was sponsored by Bluestone Home Loans. And it was really interesting to sort of dig into some of those themes about what the rate cuts mean, what the rising house prices mean, and then also the broader theme of housing accessibility and that kind of thing. So it's just so many dynamics going on at the moment, I think.
There is so much. I mean, we could probably fill a whole magazine just on being like, this is all the economic data we see around what's happening in housing, all the issues with housing affordability, what the government is doing to help people afford housing. But at the end of the day, I mean, still seeing rampant escalation of house prices, largely because of a lack of supply, which is why the Economic Reform Roundtable is so important, looking at how we can bring more supply on, how we can bring more builders into the country as well, because a lot of problem is just actually not having the personnel and the people to build all the houses we need. So much going on in the market. And of course, spring, traditionally the busiest time for the property market. So really important feature to read. If you see the September edition of the magazine, then make sure you do have a little gander at it to see what you can be prepared for, what sort of things are coming down the track. The other thing that we've been talking about this week, I actually had the pleasure of attending the mid-year Next Gen event on Thursday night. Yes, Thursday. And I was moderating a panel on open banking. So Frollo, which is part of the Next Gen group, is an open banking platform provider, and they released the State of Open Banking Report 2025. Now, open banking, as you may know, has been a little bit bumpy, the journey, over the last 5 years, let's say. And the government last year announced a reset. They brought in some new regulations. They've been trying to simplify it. And the report is so interesting from Frollo because it looks at not only where we are now in open banking journey, but also what they would like to see, because it highlights a few problems that are still existing. So a lot of the conversation last night was around the fact that broker usage of open banking platform through Frollo has actually doubled. So that's great. Seeing, I think, particularly with some of the aggregators that have the next-gen open banking, the Frollo open banking platform embedded into the CRM. So that's groups like Connective, Finsure and Mortgage Choice, I think. Those three are the ones that have them currently live. Is seeing, well, how does this help a broker? And I think Connective was saying that they think that the open banking data that brokers are receiving through the trusted advisor model now is saving them about 40 minutes of time per application. And actually the time from putting in the request to receiving the data is about 7 minutes, which many brokers will probably know what a headache it is to actually ask a borrower for all the documentation you need, the financial reports or your liabilities. They typically will probably email that over, which we know isn't the safest and not the best to do. And that will probably take them a while to do. You've just got to like sit on your hands and hope that your client is going to do it at some point so you can get the ball rolling on getting the application analysis done. So really the open banking platform really accelerating that 7 minutes between asking for it and getting it. And then also being able to automatically have this report generated, being able to see very clearly and sort of categorized what the different income and liabilities are, and also having it from very secure source. Now, I think the problems, though, that they were talking about in the report and yesterday at the event was a lot of the time there's issues when people are receiving, are trying to request their open banking data. So it was something like 30% of the time the authorizations failed. So consent authorization didn't work. And it was something like some people went up to 5 times trying to do it before they gave up. Now, a lot of this comes down to the banking platforms. And then there's also issues with things like multi-factor authentication. But generally, looking at it's still very hard to actually make the system work. So when it does work, it works great. When it doesn't work, it is obviously very frustrating. And that really impacts the uptake of open banking, which, as we know, would be brilliant. It could escalate so much of the home loan process, but still waiting for that to kind of be fixed. So it was interesting hearing from NextGen CEO Brett Stanford as he was really having a call to action to government to being like, we need this to be pushed forward. He was suggesting actually banning screen scraping would force people to use open banking, and therefore that would help bring along a lot of the banks to kind of improve their systems. He was also saying, we need better education both on a consumer level and on a broker level. And he actually flagged something I thought was really interesting. So he was saying, do you remember at the budget they were talking about the energy rebate? It was like $295 or something like that. And he was like, we've had weeks and weeks and weeks of press time and politicians talking about that saving for consumers. And he's like, but if we look at the open banking platform they have on Follow, he's like, we can see that borrowers are saving about 10 times that through the platform. And he's like, and no one is talking about that. He's like, politicians should be saying if you use open banking, you can save $2,000. Like, that's brilliant.
So they're saving that in terms of cheaper rates because it's quicker to do a...
Not necessarily on home loans, but on budgeting or on sort of savings apps. So just generally using open banking, but across the whole board. And I was like, that is crazy that there isn't more conversation about it, because that's such a big win. They already have this system. So he's like, why are they not talking about it? And there was, again, we know last year, Stephen Jones, who was the Financial Services Minister at the time, announced a big reset of the consumer data right, which is part of the open banking regime, and there hasn't really been much movement since then. So, yeah, you can read that, actually, that opinion piece from Brent Stanford on The Advisor that goes up today. Looking forward, talking about AI as well. There was a lot of conversation about where we're going with artificial intelligence in the broking industry and the home loan industry, and generally people saying it would be great for brokers. It can free up their time, help them focus on the client engagement and the education side of things. And if you haven't yet delved into the world of AI, then do make sure to check out the AI Edge event that is coming up in September. That will be going through how you actually use AI. It's actually a workshop. It's only about 40 places available. So if you're interested in that, you can check that out on The Advisor as well. It's called AI Edge. Plus, coming up this week, Australian Broking Awards on Friday. You guys excited?
Yeah, it's one of the really big ones for
us. The Oscars night of the broking industry is the ABA's, Australian Broking Awards. It's on Friday at the start. It's a daytime event, so it's always really fun seeing everyone, get dressed up. It's cocktail attire, but you can probably get away with business if you really wanted to. But really fun to see everyone in the room celebrating the broking industry. It's really our main broker-focused awards. So some of our other awards will talk about lenders and BDMs, whereas this is specifically really focusing on broker. So we've got big awards like National Best Residential Broker, National Best Commercial Broker, Best Asset Finance Broker. We've got regional brokers being celebrated. We've got individual brokerage officers being celebrated. And then we have so many of the lenders who obviously work with brokers each and every day in the room as well, who are partnering with us, including our principal partner, NAB. So we'll hear from Adam Brown, who's the head of broker at NAB, on the day. Next Friday. So if you haven't yet bought your ticket, you have to do it in the next couple of days because we'll be closing off the portal, getting all of our numbers finalised. So make sure you do it today or this weekend if you haven't already got your ticket to the ABAs on Friday the 29th of August, because it will be too late very soon. Speaking of which, don't also forget to put in your submissions for the Elite Broker Ranking, which is coming up. The submissions for that close on Friday, so you might want to do it before the ABAs, as well as submissions for Women in Finance Awards are open at the moment, for the Commercial Finance Awards. We've got so many things going on, but if you check them all out on theadvisor.com.au, you'll find them all there. Will, Ben, any nice plans for the weekend?
Hopefully a bit of surfing.
Oh yeah, good luck.
Honestly, pretty chilled, yeah. I've got the marathon next week, so
Keeping
relaxing.
your head down.
Yeah. What about you guys?
Not too much. Premier League's back, so
Yes.
probably staying up to all hours of the morning, I think.
Yeah, Premier League's
The
back.
team I support is playing at 2 in the morning on Sunday mornings.
Will you stay up or?
We'll see how it goes.
Who are they playing?
They're playing Arsenal, so yeah.
Yeah, I am going out tomorrow for a lovely lunch with some friends at Pilu and Freshwater, fancy schmancy.
Nice.
But I'm just hoping the sun comes out because it's not great to just sit there miserably staring at a beautiful sea in the rain. But, we'll see. We'll have some food to sort us out. And then obviously, preparing for the week ahead and the ABAs on Friday. If you've got any questions for us, then do feel free to reach out. You can reach me at editor@theadvisor.com.au and listen out for other podcast episodes on the Advisor Podcast Network. We've got them all there, including our new video podcast, which thank you to everyone who's been reaching out and talking to us about that and saying how much fun it is to see us chatting away in the studio. And if you've got any other things that you want us to talk about or to delve into, then do let us know. We're all ears. And if we don't catch you beforehand, we'll hopefully see you at the Australian Broking Awards on Friday. We hope you have a fab week and we'll catch you next time for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.